So the session began with so much promise, right? And then there was news that, well, just really knocked the stuffing out of bank stocks. You can see financials getting hammered more than all the others. And the broad market rally, by the way, became a sea of red. Now, from what I could gather, there were no surprises from Fed Vice Chair of Supervision, Michael Barr, who urged, right, 9% capital increase instead of 19%, which had been floating around for a long time. This for banks with $250 billion in assets. So that wasn't news per se, but maybe this was it. I want to look at this for a second. Ally stock drops 15%. It's down more than that right now. They were at a conference, and the chief financial officer presenting at Barclays. He said a few things. Some of the things he said that scared the heck out of the markets. Our credit challenges have intensified. Late payments on auto loans in July and August rose by 20 basis points more than expected. We clearly are dealing with a cohort of borrowers who have been struggling with the cost of living and now are struggling with an employment picture that has worsened. The stock getting absolutely hammered on this news. In fact, it's looking like one of those dollar store stocks. You can see it's down here. A couple of days ago, it was significantly higher. So let's bring in QI Research CEO, Chief Strategist, Danielle DiMartino Booth, because Danielle, none of this is news to you. You and I have had this conversation over and over again. And what I'm curious about is this market reaction. Do you think, I mean, this is smart money. Is it just that smart money living in ivory towers didn't know this stuff was happening?
I don't know about all that. I mean, by the time you get to revisions to payrolls that are north of $1 million, at some point you're like, okay, maybe I should be questioning the data, no matter where I occupy, whether it's an ivory tower or the sell side. But I think what
no one's
Ally did this morning
was that, I'm saying, look at J.P. Morgan's getting hammered. It's down almost 6%.
Well, and why is J.P. Morgan getting hammered? It's very rare, Charles, that a large bank stock, a big city, a big bank center stock will follow a smaller lender like Ally.
Right.
But that's exactly what we've seen, because J.P. Morgan's pointing out that not only are our net interest margins going to be lower, but that expenses are going to be higher, and that is code for, you know what, Ally's talking about higher charges because of auto loan losses, and other ones, other lenders are talking about credit card losses. J.P. Morgan's going to get hit with both. And so their expenses are going to go up much higher in terms of losses on the consumer. We're expecting to see at QI Research charge-offs on autos and credit cards exceed those that we saw in 2010 at the heights, given unemployment is just now picking up. That's what made the market so scared this morning, Charles. It was that Ally actually said, job losses are a problem.
Yeah, that was that last line I read. So you brought up the consumer. Yesterday, 3 o'clock, the consumer credit number comes out, and I'm blown away, honestly. I mean, it was huge. It exploded. I guess, we just shop till we really drop. I mean, but how do you explain that the people are still out there spending when they don't have it?
Well, Charles, that is the American way, right? Until you're stopped from spending, because so many government officials encourage you to go spend, 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 you don't stop. But what we did hear was from yet another bank yesterday afternoon. We heard from Citi, and what Citi said was that they're seeing a shift in their credit card customer base from using their credit cards to charge on discretionary things we want to buy to essentials, to groceries, to gasoline, to the things that we absolutely must cover. That means that $10.5 billion increase in credit card charges that we saw inside that data yesterday, a lot of it's going to end up in delinquency going forward.
Right.
And that was why I think it's Citi that really started this off yesterday afternoon, followed by Ally,
right,
followed by J.P. Morgan.
Great point. I had not heard that, but it makes a lot of sense. So this morning, we got small business optimism. It absolutely swooned, right? And then parts of it look really crazy here in a nervous way. Small Business Uncertainty Index absolutely rocketing higher. Their earnings, we're learning now that their earnings are getting absolutely hammered on the other end of this whole spectrum. And then their outlook. The outlook is really murky, in part because they say economic and political reasons. So here we have the earnings. Again, the earnings are coming down. And this is sort of a free fall here. And I just want to get your thoughts, because these are small businesses, right? They're really, really worried about what's going to happen in November and what's going to happen with policy. And we have it again. Economic conditions is not a good time. They're uncertain. Political climate, not a good time. They're uncertain.
Well, Charles, let me tell you about how uncertain they are. Inventories, inventories, inventories. 3 different measures of inventories from the National Federation of Independent Businesses show that small businesses are absolutely getting rid of inventories and not willing to build inventories. That is the surest sign of the uncertainty that you're mentioning in the future. If small businesses aren't even willing to plan for tomorrow by building up future stores, by stockpiling anything, they're dumping inventory. That is a huge, huge, huge vote of disconfidence in what's coming for the future of the U.S. economy.
Oh, boy. Hey, Danielle, I'll see you next week for the Fed decision. Thanks so much for your help today. Appreciate it.
Absolutely. Look forward to it, Charles.
All right, me too.